The next 24 hours are going to be some of the most important we've seen in weeks, not just for crypto, but for the entire global market. Stocks are opening back up today, and we're already seeing signs that could determine whether this was the true bottom or just the calm before a massive reversal. On top of that, new updates surrounding the US and China trade situation are set to drop, which could shake up everything from equities to Bitcoin to XRP. This is not financial advice. Now here's what's really happening, and why the timing could not be more critical. A lot of people were wondering if the stock market would even be open today because of Columbus Day, and the answer is yes, it is. A few markets like bonds aren't open, but stocks are trading, and we're already seeing early movement that's setting the tone for the week. And when stocks move, crypto moves, especially when volatility spikes like this. As we open up the day, the crypto market is flashing a sea of green. Altcoins are roaring back, some jumping 10%, 20%, even 50% on the daily chart. XRP, HBR, XLM. All of them pushing higher as traders rotate back into the market. The big picture right now? We're not just watching prices pump, we're watching major levels get reclaimed, previous support zones that need to flip into new floors for the next leg up. Bitcoin is holding around $114 to $800. Ethereum sitting near 4100, XRP hovering around 256, and XLM up near 0.34. HBAR is back around 0.18, and the broader market cap has climbed to about $391 trillion, brushing that $4 trillion mark on some trackers. Fear and greed index? Back to 40, which means we finally left that panic-driven fear zone and moved into neutral territory. That alone says a lot about the shift in sentiment we're seeing. And this is exactly what smart investors were watching for. Because when retail panic sets in, indicators like RSI reveal where the real opportunities are hiding. Over the past week, a lot of altcoins hit oversold levels we haven't seen in months. When you zoom out to the 24-hour or 7-day span, you'll notice the same pattern. Exaggerated selling pressure that hit hard across the board. It wasn't just fear, it was exhaustion. The market flushed out weak hands, and now we're starting to see the reversal form right where the indicators told us it would. During these kinds of moves, you'll see posts all over social media, headlines, rumors, and panic tweets designed to spark reactions. Be careful what you believe. Just earlier today, a few large crypto accounts posted about tariffs and trade updates that sent waves through the market. But when you trace the sources, a lot of it isn't confirmed. And that's exactly how big players manipulate sentiment to trade against the crowd. The truth is, this week's movements aren't about hype. They're about positioning before the next major phase. And that's exactly why I built the XRP Millionaire Blueprint, to help you understand how this next cycle actually works, step by step. It's a complete system that lays out everything: documents, visual breakdowns, infographics, and videos, showing how XRP adoption unfolds, how to identify institutional patterns early, and how to position yourself before the next parabolic phase begins. You'll see the data, the timeline, and the strategy that top investors are using right now. It's all laid out clearly so you can follow along. You can find it in the pinned comment below the video. Now, back to what's unfolding in real time, because this setup is big. We just saw exaggerated selling pressure across altcoins that led to massive liquidity wicks. And the reaction off those lows tells us that a major reversal is brewing. For instance, XRP saw a flash dip, but quickly rebounded from the 236 region, confirming strong support. When you analyze the RSI for XRP, it just touched levels not seen since July 2024. A clear sign of exhaustion and potential bottoming behavior. When you line that up with the broader market, the story becomes even clearer. Stocks on Friday saw a 3.1% single-day drop on the S&P, a massive red candle that triggered panic across sectors. But on the lower timeframes, that move also pushed indicators deep into oversold territory. Fast forward to pre-market data today, and what do we see? Futures are bouncing hard. The Dow up 0.9%, S&P up 1.2%, and Nasdaq up 1.6%. That kind of reaction after a major sell-off often marks the beginning of a V-shaped recovery. the same kind we've seen after every panic washout since 2020. So, what does that mean for Bitcoin and crypto as a whole? Simple. Liquidity follows confidence. If stocks open strong and momentum sustains, that capital flows back into risk assets, especially crypto. Bitcoin already gave the first signal. It just closed a higher low on the weekly time frame, the first step in confirming a structural reversal. And on the daily chart, BTC broke above the $113,400 zone and is now challenging the $115,400 resistance. Once we break and hold above that, the next key target sits around $117,600, and above that, a run back toward $126,000 would confirm the bottom is in. Ethereum is following right behind. Its chart shows a clear bullish divergence, price making lower lows while RSI prints higher lows. That divergence is powerful because it often signals trend reversal before price catches up. The key for ETH right now is flipping $4,200 into support. Once that happens, the next target is $4,500, and from there, the chart opens up all the way toward retesting the all-time highs later in the cycle. And then there's XRP, which, by the way, continues to show one of the cleanest technical setups across the top assets. Despite the volatility, the structure remains intact. After that liquidity wick down near 236, XRP has been consolidating above support and building pressure. The main breakout level to watch is $2.60. Once that's cleared, the next zones are 2.73 and 2.97, marking the key Fibonacci extensions from the last impulse wave. What's fascinating here is that RSI divergence, liquidity wicks, and structure across BTC, ETH, and XRP all line up at the same time, something that usually happens right before a synchronized rally across the entire market. When you pair that with easing headlines between the US and China, and the fact that fear has reset back to neutral, this looks like a setup for an explosive bounce. Of course, there's one more layer to this. When you zoom out to the weekly RSI levels, you'll notice that the broader crypto index hasn't been this oversold since early 2025, which was the same period that marked the bottom before the last rally. History doesn't repeat perfectly, but it often rhymes. And this is exactly the type of setup long-term investors look for. Panic-driven liquidations followed by silent accumulation and breakout confirmation. So, as markets open today, keep your eyes on how the S&P and Nasdaq behave in the first few hours. If they hold the early gains, that could confirm that last week's dump was indeed the washout bottom. If Bitcoin continues to hold above 115K and Ethereum breaks through $4,200, we'll likely see the crypto market regain momentum rapidly. XRP is the one to watch, not because of speculation, but because of structure. The bullish divergence, strong support zone, and liquidity reclaim all signal strength building underneath the surface. And as we go deeper into this week, updates around trade negotiations will keep influencing sentiment, but sentiment follows structure, not headlines. That's the difference between reactionary traders and strategic investors. When you focus on what the charts and data are actually saying, not the noise, you see the story forming before it goes mainstream. The setup right now looks clean, and the alignment across traditional markets and crypto could make the next 24 hours the pivot point of this entire quarter. With RSI bottomed out, fear resetting, and capital rotating back into risk assets, the stage is set. What's about to unfold over the next few days could set the tone for the rest of this quarter. We're watching a moment where both traditional and digital markets are aligned for a potential breakout, and that rarely happens at the same time. When we talk about market alignment, we're not just talking about price charts, we're talking about psychology. After every major sell-off, you get that exact same emotional curve. Disbelief, fear, capitulation, and finally, quiet accumulation before the next phase begins. What we're seeing right now looks like the quiet accumulation stage, and it's happening while retail is still hesitant to jump back in. That's usually where the biggest runs start. Think back to what we saw in April 2025. Similar conditions, similar sentiment, similar RSI structure. Back then, Bitcoin had just flushed out a massive number of leveraged traders. The market was convinced we were heading for deeper lows. And what happened next? Bitcoin reversed, broke structure, and went on one of the strongest mid-cycle rallies we'd seen in years. That's the kind of pattern we're watching for again right now. But this time, it's not just Bitcoin driving the move. Ethereum, XRP, and other large caps are all showing early signs of strength. For Ethereum, that divergence we talked about earlier is extremely important. When you see RSI forming a higher low while price forms a lower low, that's an early indicator of internal strength. It means momentum is shifting before price confirms it. So while ETH has been hovering just below that $4,200 level, it's building a base that could explode the moment Bitcoin confirms its next leg up. And here's what's interesting. When ETH usually breaks out, it drags the rest of the altcoin market with it. You'll start to see layer 1 projects like Solana, Avalanche, and Cardano wake up, followed by the mid-cap ecosystem plays, the ones tied to real use cases, especially in payments, AI, and interoperability. Historically, that's how money rotates. Bitcoin rallies first, Ethereum follows, and then altcoins take their turn. The early signs are showing that we're entering that second stage now. Now, zooming in on XRP, the structure remains one of the cleanest across the market. It's respecting every technical level almost perfectly. After holding strong around the 236 region, XRP has reclaimed short-term support, and every dip since then has been met with aggressive buying volume. That's what healthy accumulation looks like. We're not seeing massive wicks with no follow-through. We're seeing controlled moves upward with rising volume. When a chart behaves like that, it's showing that liquidity is shifting from weak hands to strong hands. And when that process completes, it's usually followed by a breakout that takes everyone by surprise. The resistance levels to watch remain at 260, 273, and 297. Once we start closing candles above those zones, especially on the daily, the path to the next major leg higher opens up quickly. We can also take a look at how the RSI and MACD line up here. The RSI, as mentioned earlier, hit its lowest level since mid-2024 and has now begun curling upward while price is consolidating sideways. That's a textbook early reversal signal. Meanwhile, the MACD histogram is flattening out, indicating that downward momentum has completely cooled off. These are the kinds of signs traders look for before a breakout confirmation. What's equally important is that we're seeing this setup form at the same time that the macro environment is shifting. Over the weekend, both the US and China signaled a willingness to ease trade tensions and resume negotiations. That's not a small deal. When global trade headlines start softening, risk appetite across all asset classes increases. Institutions begin reallocating toward equities and crypto, especially when yields and volatility start dropping. Take the futures data as an example. The Dow Jones futures are up nearly 1%, S&P futures up over 1.2%, and the Nasdaq futures up almost 1.7%. That tells us money is rotating back into growth and tech, which often leads the charge during recovery periods. Crypto, being the highest beta asset class, benefits the most from that rotation. When you compare that to previous recovery moments, like January 2024 or even mid-2023, the behavior looks identical. In both of those periods, Bitcoin and altcoins bottomed slightly ahead of the traditional markets, and once stocks confirmed a reversal, crypto accelerated faster and stronger. If history repeats, this could be the very beginning of that pattern again. Something else to focus on here is how the fear index reset. We went from extreme fear to neutral in just a few days. That kind of sentiment swing doesn't happen randomly. It's usually triggered by the first wave of smart money buying in, while retail is still afraid to move. These sentiment resets are the exact moments that create the biggest opportunities. Because by the time the average trader feels confident again, most of the move is already over. Now, let's look at the structure of Bitcoin more deeply, because it's leading this recovery phase. Bitcoin's daily chart shows a clear series of higher lows forming since the wick down. That tells us that buyers are defending each dip more aggressively than before. We also have strong volume confirmation on each of those bounces, meaning these aren't weak rebounds. They're structurally supported by real accumulation. The key level to hold right now is $115,000. Staying above that level into the next daily close would confirm a break of short-term resistance. From there, the next major zone sits at $117,600. The level that, once flipped, signals that the bottom is fully confirmed. Above that, the next major resistance sits around $126,000, which is where we could see momentum truly accelerate. Ethereum's structure mirrors that almost perfectly. The RSI divergence is strengthening and price continues to compress under resistance. When compression like this happens after a long sell-off, it's often the coiling of energy before a large move. If ETH closes a daily candle above $4,200, the move to $4,500 could come very fast, potentially even within a single trading week if momentum holds. And XRP, while moving more deliberately, tends to follow a similar rhythm once Bitcoin and Ethereum stabilize. Historically, when Bitcoin leads a relief rally and Ethereum confirms it, XRP tends to outperform in the following phase. The reason is simple. XRP structure is often built on consolidation zones that accumulate liquidity before breakout moves. Once momentum kicks in, those zones turn into strong support levels, allowing price to move more freely toward resistance. Another aspect worth discussing is how liquidity and volume are interacting across exchanges right now. Over the last 48 hours, we've seen rising open interest alongside decreasing funding rates. That combination tells us that new positions are entering the market, but not purely on leverage. It's a sign of real spot accumulation, which is much healthier than leverage-driven spikes. When you see open interest and funding balance like this, it's typically a precursor to a sustainable trend rather than a short-term pop. Let's also zoom out to the bigger picture. On the weekly time frame, the entire crypto market cap structure looks like it's forming a massive higher low, right around that $3.8 trillion to $3.9 trillion zone. This level previously acted as resistance earlier in the year, and now it's flipping into potential support. That's another sign of strength. Previous ceilings becoming new floors. If the market cap can reclaim $4 trillion convincingly, it could signal that the macro bottom for this correction is already in. Beyond the charts, consider the macro catalysts. We're seeing potential easing between the US and China, easing inflation pressures globally, and renewed discussions from major institutions about digital payment infrastructure. These all point toward one thing: confidence is rebuilding. Markets thrive on confidence. Every time confidence returns, liquidity follows. And liquidity is what fuels the next expansion phase in crypto. It's also worth mentioning how synchronized this setup feels. You have traditional markets showing signs of recovery, crypto finding bottom structures, RSI divergences appearing everywhere, and sentiment resetting from fear to neutral, all at once. That doesn't happen by coincidence. These macro and micro alignments usually precede strong directional moves. If Bitcoin can hold above 115K, Ethereum flips $4,200, and XRP clears 2060, the technical picture shifts completely. Instead of a market in recovery mode, it becomes a market in breakout mode. The difference is massive. It changes the psychology from, I hope it goes up, to, I don't want to miss out. That's when you start seeing momentum snowball and liquidity flood back into the market. Another key thing to watch this week is how volume behaves during US market hours versus Asia and Europe. Lately, the strongest moves have been coming from US sessions, which suggests that traditional capital might be flowing back into crypto. If we see that pattern continue, strong US session inflows and consolidation during Asia, it'll be another sign that risk appetite among institutions is returning. We can also monitor volatility indexes like the VIX. As the VIX falls, risk assets tend to rally. If we see continued declines in volatility alongside strength in equities and crypto, that confirms confidence returning. Combined with easing trade tensions and supportive macro signals, the technical setup becomes even stronger. To sum up where we are right now, the market has reset sentiment, found support, and is showing signs of structural strength across major assets. Stocks opening in the green this week could act as the final confirmation that the worst is behind us, at least for this phase. The indicators all point toward recovery. Higher lows, RSI reversals, bullish divergences, and strong accumulation zones. If we see follow-through over the next few sessions, especially from Bitcoin holding above its key levels, Ethereum reclaiming resistance, and XRP breaking out above that $2.60 range, this could evolve into a sustained rally. Every chart, every indicator, and every macro headline is aligning for a potential shift, one that could define the rest of 2025's market cycle. Now here's where things start to line up almost too perfectly. The fundamentals, the technicals, the sentiment, all pointing in the same direction. We're witnessing a silent setup, a moment that often goes unnoticed by the broader market until it's already too late to catch the move. XRP's chart has been consolidating within a range that historically precedes massive breakouts, not just in price, but in velocity. And when this thing moves, it moves fast. What's interesting is how capital is positioning itself. Despite the low retail activity, on-chain data shows accumulation from wallets holding between 1 million and 10 million XRP. These mid-tier holders, often overlooked, are quietly increasing their stacks. Historically, this bracket of holders starts accumulating right before major institutional entries, almost as if they're front-running the inevitable liquidity expansion. At the same time, XRP's liquidity corridors, the rails that connect fiat systems to digital pathways, are being tested more actively than at any time since pre-2020 levels. Volume spikes on regional corridors in Asia, South America, and the Middle East indicate that the infrastructure is no longer in beta. It's live. This aligns with what we've been tracking for months. Real-world settlement volume rising without a corresponding surge in speculative trading. That's a textbook divergence. Utility rising while price stagnates, and it rarely lasts long. When you zoom out and pair XRP's setup with the broader macro environment, the pressure becomes undeniable. Traditional markets are still struggling under tightening liquidity, with central banks, especially the Fed, holding firm on a higher for longer interest rate stance. That's putting enormous strain on debt-heavy economies and choking capital flow worldwide. The US dollar, once the pillar of global trade, is showing signs of exhaustion, while inflationary pressures continue eroding purchasing power across regions. As nations look for faster, cheaper, and more transparent settlement solutions, the old systems like SWIFT simply can't keep up. Global trade imbalances are forcing a shift toward digital alternatives that can move value instantly and efficiently. And right now, Ripple's enterprise-grade payment network, powered by XRP, stands out as one of the few solutions capable of bridging this gap between traditional finance and the emerging on-demand liquidity era. This isn't just a crypto play anymore. It's a monetary systems play. And when that switch flips, XRP won't move like a speculative altcoin. It will reprice as a utility asset embedded in a global liquidity framework. That's the distinction most people miss. This is why we've seen XRP's market cap multiplier effect, where a few $1 million of inflows generate billions in market cap expansion. It's the structure of the ledger, the liquidity efficiency, and the low float combining into exponential reaction when volume enters. Now, let's be clear. We're not talking about hype cycles. We're talking about structural change. The charts show it, the data shows it, and the fundamentals confirm it. We've already seen how similar setups have unfolded across the last decade in traditional markets, from the dot-com adoption curve to the fintech explosion. XRP is sitting in that exact phase, the inflection point between disbelief and inevitability. So, what happens next? Watch for volatility spikes with higher lows, not lower highs. That's the tell. Watch how volume clusters near resistance instead of rejecting it. Watch how price begins to compress tighter and tighter, because that's when liquidity ignites. These are the early signs of expansion, and if history is any guide, the moves that follow often rewrite market valuations. We're at that crossroads, quiet accumulation, global corridors lighting up. a suppressed chart-building energy like a coiled spring. The kind of moment that, months from now, people will look back on and say, "That was the signal, and I missed it." If you want to understand exactly how to identify these turning points, how to read the underlying data, and how the global framework around XRP is structured, I've broken it all down inside the XRP Millionaire Blueprint. You'll find documents, charts, infographics, and in-depth video analysis that connect every piece of this puzzle. It's built so you can see what institutions are seeing before they make their move. You can check it out right now. It's in the pinned comment below the video.